A very good morning. Good afternoon, everybody. Good to see you, Ram. Sue. Morning, both. TM, Stephen. Right then, folks. Got some good things to look at today. Going to give folks 30 seconds or so to sign on in. Yeah, hey, TM. Right, let's get stuck in, folks. A very good morning to you all. So, as we summarize, what we're going to be looking at is a couple of things. We're going to be reviewing the dollar yen long trade and the euro dollar short trade I've got on. I'll show you how to play that. And I'll also show you if you were waiting yesterday and thought we didn't get our entries because we didn't get our entries, I can show you like ways you could have been nimble with that, right? Now, I know this is kind of after the event, but you understand that I want to educate as well, right? So some of it you have to go after the event. It can't all be forward looking, if you know what I mean. Um, and I also want to point out a new learning point for you, which, well, I say new learning point, that's presumptuous of me. For some of you, this would be a learning point, which is the presence of option expiry levels. There's a big one in the dollar yen. I'm just going to point that out to you. And how to use the option expiry levels is I've done a video explaining that here, which is in the chat. Okay. Hey, Jesse. Hey, Osho. Good morning to you. Now, remember the key principle of this session is to understand the macro fundamentals and the daily sentiment. Yeah, good morning, Jesse. Um, and what we want to find in these sessions is how we interpret all the macro fundamentals and the sentiment into actionable trade ideas. Now, it's very important that when we're executing trade ideas, the risk is kept to an absolute minimum. The biggest weakness in macro fundamentals can be when you've got a strong conviction for a trade direction and the market goes against you. And if you look at many people who kind of either reject the macro fundamentals or move away from the macro fundamentals or traded macro fundamentals for a few years and then got out, it's often because of that reason. They just don't have the conviction that the market's always going to be rational enough. Um, and there's loads of examples you can look back through history and of people who've made brilliant financial calls, but they're either too late or too early. Very easy to do that, right? You can see a problem coming, right? And you can trade an instrument thinking, I know this is wrong. And then, the trade goes 500, 600 points against you. So not only do you have to get the macros right and the sentiment right, you've also got to get your risk right. And it's only when those two marry together that it really works, in my opinion. If you don't have the two together, look, there are times, it's about two, three, four times a year when it's just a no-brainer trade, right? It's just no-brainer. Um, but aside from that, there's lots of times when it's, and we'll look at the RBA interest rate decision from last night because it's a kind of, and I'll show you how we can play that to make the work in our favor. Right? So that's by way of instructions. Remember, the first thing we always want to do is go along to the daily European opening news. Let's have a look what's going on. So Asia Pacific stocks mostly higher. Several bourses firmly recovering from the prior day's sell-off as the region took emphasis from the positive handover from Wall Street. Great. Trading the ES yesterday, got some lovely long trades, nice bit of absorption with lots of trap sellers and got some nice longs on that. Got $1,300 on that sentiment yesterday. Right. The Reserve Bank officer, they hiked by 25 basis points as expected, marking the first hike in over 2 years. And they noted that the underlying inflation is higher than expected and GDP growth has continued to pick up. So that's why we saw a little bit of upside in the Australian dollar on the interest rate decision. Because remember, what markets are looking at, right? Was it tradable? No, it was not tradable in my view at all. Um, Let me show you what we're looking for. What was expected? A hike. What did we get? A hike. Was it a surprise? No, right? But there was a surprising element is that they were noticing inflation is a bit hotter and GDP is a bit higher. So that's the element of surprise. That's what's given the Aussie dollar some upside. Does it change the bigger picture? Almost certainly not, right? And that's my take on it. So we'll look at that in a bit more detail. Now, this was important for the dollar long sentiment trade. The Bureau for Labor Statistics will not release the January jobs on Friday due to the partial US government shutdown. And JOLTS has been postponed, as is ADP, as far as I'm aware. Right? So, okay. European marks cash open positive. And if you just take a look, you can see this on this is very clear on the futures charts, but you can see it's very clear here, right? Bullish engulfing bar, bullish engulfing bar, bullish engulfing bar. This wants to go higher, right? Or certainly having an attempt at going higher. Bullish engulfing bar in Euro stocks. Remember that DAX? We were looking at that for potential false break of Harami inside bar, and it got, it kind of moved and hit target within the session. That tells you how positive sentiment was. And look at the volatility dropping lower, right? So it's a positive mood out there, and the Japanese bond market is showing stability. US treasuries are up a little bit. That's helping to support the dollar in current trade. See gold, copper, silver just finding a little bit of upside after that big sell-off. I have got a gold upside bias. I'll share that with you as well. And you see the dollar putting in that weekly hammer reversal. We looked at that technically yesterday. So if you want a technical rundown on that, the pros and the cons of this, do look it out, look it up. We've also got the ECB meeting this week and the Bank of England meeting on Thursday. So we've got significant decisions, and the non-farm payroll, which I was expecting to support the dollar this week, is now not being released till next week. So do you get a bit of residual dollar strength still, right? That would be my base case. And we didn't see any intervention from the Ministry of Finance. So dollar yen upside makes sense. And I've got a target ultimately in my dollar yens. I'll look at that longs up at 15724. So I'm looking, if I can get up to there, then that will be my profit taking area. And when we look at the currencies for the session, we see that the Aussie dollar is benefiting, right, with that RBA interest rate decision. And you can see the related moves. Now, our interest rate tracker here is very helpful, because let's have a look and see what is the change going on. And you can see that there is a significant change now. And for the next interest rate decision, March the 17th, a hold is still seen as the most likely option. But you notice, look at the way the curve has jumped, right? So that for May is now seen at 4.039 versus 3.92. So you've got 0.8, an 11 basis point jump after the RBA interest rate decision. So that does keep the Australian dollar just gently bid, right, in today's session. Now, remember what we're looking at here. Even as a jump there, the question is this now, right? And this is why a session like this is really helpful. Does this now change the bigger picture? And let me ask you a question. Would you be so convinced that the Reserve Bank of Australia is now going to be hiking interest rates that you could buy the Australian dollar against the US dollar and give it a 400-point stop? Would you? Right? And the answer should be no. It's not clear. Okay, they've done a hike, but will they do any more? Won't they? It's going to depend on incoming jobs data, incoming inflation data. And if you look at what will decide the next decision, you can see in the RBA, where we go, let me show you here. Right, job market conditions. So jobs data, inflation uncertainty. So inflation data is going to be important. Underlying inflation higher than expected, right? 3.4%, is substantially higher than expected in the August statement. GDP growth up, labor conditions solid, right? So in other words, the pressures are judged to be greater than previously anticipated. That's why you got the Australian gaining, right? Um, so they're looking at a cash rate of 3.9% in June, 4.2% in December 2026, and 4.3% in December 2027. So they're starting to expect a series of interest rate hikes coming. Look at the GDP, up 2.3 versus 2, 1 point. So everything is like supportive of the Australian dollar, right? Um, and you can see here, if you look at the projections, you see it's up against the board. Now, that does give like a very short-term upside bias in the Aussie dollar. So there's two things you could do with it. So you can say intraday, okay, intraday, Aussie yen upside makes sense, right? So you can look at that and say, well, let me see technically what makes sense in the Aussie yen trade. Let's just see if I can Aussie US dollar. Right. So you can see here on the data, up, up, got a nice little, you see, that's the sort of, if you were trading that, that's the sort of trade you would have gone for. Short term little pop from here, right? And now what you're getting is another little kind of trying to flag pattern. So if you wanted to take this long, like a decent area would be like this long position on the break of that high here and the break of that trend line with a 5 point stop, try up to 3 times. Okay. Don't get into buying it here and having a stop underneath this level because this could be an easy reversal for the Australian dollar, right? It might be a buy the, remember we're looking at buy the rumor, sell the fact response. That is the default to expect. It's the fact that the forward guidance has been higher, but how much is the market going to buy that? That remains to be seen, and it's an open question in my mind. And I'm not the only analyst saying that. Like the guys over at ING, they have a similar perspective, and it's one I share. Doesn't mean I'm right. Doesn't mean ING right. Not saying that. But the point is if you're wrong, that's your level. So by picking a level like this, you can go like, you could have one order cancels another. So stay above, stay long, right? Stay below, stay short. That way, you've only got a minimal risk around that level, which is the kind of the right level to have it. There's underlying reasons for yen weakness that are still there. So Aussie yen upside for today's session makes sense. Or the other way is to go for a trend line breakout and look at the on balance volume pushing higher. That's a good proxy for volume in the spot market, one I like. So if that on balance volume turns green, goes up, right, and you break out through that level, you could have a little scalp higher. Okay, so let's go back to, so that's the Australian dollar, right? So we've seen why the Australians gained out of the meeting. Um, and then if you look, so look out for any other RBA interest rate comments that we've had, right? Now, looking ahead, PMIs, Bowman, Barkin, Eastman Guard, UK earnings from AMD, Supermicro, Amgen, Amcor, PayPal, PepsiCo, Pfizer, American Public. So we've got some more earnings coming out later. Trump was speaking to Modi yesterday. Oil's being pushed and pulled around. Let's have a look. Yeah, we had that better than expected ISM manufacturing PMI data. That was very good, right? And that did help support stocks upside and dollar upside. Right, first expansion in 12 months as well, and the fastest pace since 2022. Good data, right? Um, let's see what else is going on. Right, the JOLTS report and the NFP report, that's the only thing, and that's why some of that dollar strength is a little bit more questionable. I'm still following the dollar strength narrative with US President Trump appointing Warsh. One of the reasons we've seen like a big maybe sell-off in gold and silver and precious metals is that if Trump had gone and appointed a really political Fed chair who Trump could say to him, cut interest rates, and he'd do it. That's why commodities were rising because they saw potentially, a ballooning inflation problem. Now, Warsh is seen as much more level-headed and straight. So that's why the dollar's strengthening. We've seen calm in the US Treasuries. We've seen the VIX pushing lower. Yeah. So market risk on. Let's have a look. Let's do our sentiment. Equities up, right? Bonds being sold off, right? Yes. Commodities higher broadly, right? Oil's moving lower, but that's on its own drivers. You've got dollar. If it's risk on, the dollar's a bit weaker. And today, generally speaking, today you can see that the dollar is just sort of range bound. So in the current context, yeah, Aussie, New Zealand dollar higher, yen, dollar, Swiss franc lower. So yeah, it's a risk on tilt. So now let's start looking at some trade ideas. So euro dollar, right? Still looking to short the euro dollar. Dollar yen, still looking to go long dollar yen, right? Let's just see what else. Gold, right? I'm looking for gold to go long. I'll show you the level I'm looking at. We looked at an Aussie yen. I want to also cover the euro dollar and dollar yen from yesterday. So yesterday, and I'll also cover I've got shorts running from the 951 here on the daily, right? So nicely, and you can see here that was a 3 inside bar down pattern. So you could have sold that just at the market yesterday because it's an inside bar down pattern. Very strong technical pattern. And you can see the dollar strength is just forcing this euro dollar lower, right? Now this area here, a retest of that 48 is suitable for shorting to today. So I've moved my stops from 76 from this position here. So I'm locking in, whatever it is, 70 odd points, right? So that's like, 10 to 1, just locking in underneath that daily high. See if I can carry on down to this 670 region, but we'll see. For today, still looking at euro dollar short, so this is the level. If we get back up to the 40, that swing point there, I'll short it from 40 lower. 5-point stop, just there, right? Try up to 3 times. Now remember, like yesterday, we were looking for a run back up to this region up here, weren't we? Up to the 94. If you remember, we were looking for a short from that region. We didn't get it. So another strategy, what you could have used is just a simple trend line break here. You thought, oh, if I think it's dollar strength, you could have gone for a trend line break on balance volume pushing lower, and you could have gone with that break there. Yeah, and you can see there was a run there from the 40 all the way down to the 80. So there were 2 options. Like the perfect entry was up at that 9.5, which I was going for, or you go for a trend line break, or it's a 3 inside bar down pattern. You just sell at the open. Similarly with the dollar yen. Right, exactly the same. What do we have? 3 inside bar up pattern. So I brought my position from all the way down here up to the 154.47. I've locked in that profit. All right, I'm looking to go up here to this 157.24. is a nice options level. So if I get there today, I'll be closing out on it. There's an option level expire at 15575.80. Now they expire about 3:30 UK time. Um, and those option expiry levels can contain price. Do you see there? It's at 75 and 80. So we're right in this level here. It's $1 billion. So that can create a little bit of uncertainty. Now, if we can push higher, then another potential entry would be just going with the breakout at that 15620 region, right? And just go like with another 5 point stop there and see if you can just keep going higher. So 5 point stop from the 15620, try up to 3 times, right? So that's a dollar yen upside. Similarly, if we get lower, you got this rising window, right? And you just got this support off that. But also here at the 15483 is good support. But otherwise, with this gap, right, not unreasonable. I would say like go for the 15563, okay? But I'm not because it's option expiry level. And it works like a support and resistance. And the market can just like oscillate around there. Sometimes it will break through, sometimes it won't, but just got to be aware of that option level in the dollar yen. In gold, right, this dip is continuing to be bought. This is, you see that little turning point here, right? So stay above this, stay long, go underneath, go back short, right? So this is the level. I'm going to go for a potential long at the 4939. $7 stop. Right, try up to 3 times, right? It's a nice little area, and that's all the risk you need to have. You don't need to have hundreds of dollars of stop, right? So that's my gold outlook. The Aussie US dollar as well. I do see a potential short here. And the short I would get from a kind of market repricing onto this Aussie dollar strength would be shorting from the 6981 with a 5 point stop just underneath the daily pivot point and under this kind of, you see this swing, 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 swing pivot point. So get underneath that, try up to 5 times, right? And that's on the dollar strength story coming back in. It's a bit trickier, but I can try up to 3 times, and that's like fading the recent Australian dollar strength. And it's just because the market's been buying the Australian dollar on sort of higher inflation, RBA expectations, um, and I'm not convinced that this is enough to say that everything's fundamentally changed. So that's Aussie US dollar trade. Uh, okay, so let me just run through these. So Aussie yen upside potential will be going out through this level, right? 10937, 5 point stop. Get 20 points, move it to break even. Take 50% off, move it to break even. Gold, $7 stop, try up to 3 times, 4939 long, right? $7, try up to 3 times. You could also use this level, stay above, stay with it, go underneath. So it's a kind of halfway point, if you like, in a rugby match or a football match, right? Dollar yen. Go long 15620 on a breakout, clear breakout that level, $5 stop, 5 point stop, sorry. 15620 here. That we're going out of there and then just looking, then take 20 points, 50%, and then leave the rest at break even. Um, and the Aussie US dollar, so euro dollar, this level here, 118, 11839, right? So sell from there, $5 stop, 5 point stop, sorry. So all making sense? You see the logic? Similarly, the Aussie US dollar, 6981, sell 5 point stop. So they're the sort of the trades that I'm looking at today. It's based on that dollar strength remaining. Now, there's risk here because we haven't got Bureau for Labor Statistics data this week. We haven't got JOLTS jobs. I don't think we've got ADP either. Now, also remember, dollar yen, we got a standard deviation move um, at the 57.24 region. Let me just wait for this to come up. See that 57.26? So I'm going to take profit just before that level. If I get up there today, that'd be the 15726. Similarly, if the 15620 trade comes on, right, then you'd be thinking about, right, if I get up to there, I might stall. If you get through that, then 158 is the next level, big round number. And I would have it just before the 158 level. Just be aware of that if you're still trailing dollar yen at longs. Euro dollar got a bit of space. You can see that you got the 11844 is our entry. So that's just in front of that option expiry high. So that's not a bad area, just above it. So 1.1844. So you can see the 3-1 has been the high. And so you got quite close to that level. Let's see what else to look at. I'm just going to put that dollar yen long on trade myself. Don't forget, this is a sort of a breakout trade, the dollar yen. And just once we clear that option expiry level, 15620, and have 3 or 4 5 points, 5 point stop, fine. Look at the data, what's coming up. Just not a focus of the market at the moment. So euro inflation, just can ignore that. Got S&P data out for the Aussie. That could give the Aussie another little push. So ideally, if you got into something in the Australian dollar before tonight, then you just event risk and just leave it. If you got in with a $4 or $5 stop, 4 or 5 point stop, just leave the event risk alive. And JOLTS jobs not coming today. So round the balance end is, I think, you look at the data, the market knows that at some point you've got this positive payrolls data probably coming. So that should keep the dollar bid mildly. Folks, hope that all makes sense. Hope you can see how you're dealing with a trade scenario when, what's on? Yeah, is there anything really? There's nothing really on, right? But we're giving ourselves the best opportunity to take advantage of it. And notice the stops. They're teeny. They're teeny. The problem with macro trading is you might be here thinking, oh, I'm convinced in that dollar long story. Like, and you get when we saw the weakness with the way it was traded when we looked at the Swiss franc long. Remember I took earlier in a couple of weeks ago when it was hit, and it was something like this, right? I was sort of waiting for the dollar to strengthen again, right? And I had the stop. It was something like that. I can't remember what it was, something like that. And that's quite a wide stop, right? And then as soon as we closed underneath that level, I exited. It was something like that, folks, right? And it was based on the yield spread, like pushing up. So there was nothing wrong with that. The yields were saying higher prices. Like there was nothing wrong. And you can see here, look, the same again, price even lower and the yield pushes even higher, right? So you can see, but remember when we got into this, we got into this with like a 4 point stop versus this position, which was like a 150 point stop. So remember I said you've got to be careful of the risk. So this way, so there, like you can show, like even someone like myself who's like done this for years, right? You're not going to get every macro call right. So when it's uncertain, that's when you have to really, really minimize that risk. And it'll just keep you on the right side of the P&L thing, and it protects your mind. So keep that in place. I'm just going to put that back to the Aussie yen. TM, good man, right? And it was, and you're absolutely right, and that was well played, right? Now I was trading the ES at the time, TM, and for me that was like, okay, it's a bit more complicated how the stock market reacts to strong data. Because on one hand, um, interest rate cuts are less likely to come if the US economy is doing well. So you can see stocks fall, but another says, oh, the US economy is doing well, so stocks rise, right? It's kind of like, which way is the market going to wake up? So I used the order flow, but there was some great absorption with some sellers who were looking to sell yesterday, got trapped. And once that data came out, and it came out just on that 3 o'clock, wasn't it? I think it was. There was a big batch of sellers got trapped. Price went and it just shot higher, and it was yeah, I got 13, yeah, probably about just under $1,000 on that move higher. Right, exactly the same principle. And you were long the Russell 2000. Good man. Good work. Yes. Do you trade the Russell 2000 in the futures market, TM? Great stuff. Right, lovely. Yeah, and for those like who missed it, like you could have taken that trend line break. You see? And remember, there's nothing wrong with doing this. Like an inside bar up pattern is great because here you could have sold at market, stops above here with the inside bar down pattern, and then you're just trading your stop now underneath each daily lower high. So it's very tends to be a very short, sharp move. All right, folks, that's enough for today. I don't want to overload you, all right, and overwhelm you. Have a great day. We'll recap these trades tomorrow. Try up to 3 times with them. And if they don't work after 3 times, just forget it. Yeah. Thanks, TM. Cheers, folks. Take care and look forward to seeing you later. Bye for now. Yeah, see you, Reggie. See you, everyone.